Very good morning to all of you, my friends. Welcome back. So, today we'll be discussing standard costing. In the previous two sessions, we discussed few chapters, that is overheads, activity-based costing, and service costing. So, today we'll be discussing again a very important chapter. You'll find question in every attempt, that is standard costing. So, many students try to memorize the formulas of standard costing, but sometimes when the questions are on the trickier side, they are not being able to solve the questions. So the point is, as I mentioned earlier in all the lectures, there are no formulas in standard costing. It talks about only the concepts. So I'll be covering all the concepts in detail in this session, wherein I'll be covering the material variances, labor variances, fixed overhead and variable overhead variances with the help of one question. So those who are watching over YouTube or those who are watching over portal can post your queries over the portal, and those who are joining over Zoom can speak to me directly. Whatever the queries you have, you can speak to me. Whatever the doubts you have, if you want me to discuss any question, I'm here to address all your queries. So if you have any doubts in a question, also you can mention the question. If the time permits, I'll surely try to solve that question in the class. So once again, so let's start with this chapter, standard costing or variance analysis. We'll be starting with directly the material variances. As far as the concept of standard costing, I have discussed in detail in my regular batch. In fact, the concepts what I'm discussing today, these concepts are also covered in my regular batch in detail. But just a quick summary in today's class, wherein we'll be discussing all the variances with the help of one question each. So let's start with material variances. When talking about material variance, some information will always be given in the question as regards the budgeted data and actual data. So let's say the budgeted data is given, wherein the quantity is given and the rate is given. We are using two types of raw material to manufacture our final product. And the quantity used for X and Y is, let's say, 60 and 40. My total inputs are 100. My normal loss is, let's say, 20% of input. Therefore, my output will be 80. When talking about the rate also, let's say the company has given the budgeted rate to purchase this raw material, that is 5 and 4. Now, when talking about the actual data, the actual raw material used for X is 700. For Y, it is, let's say, 300. Total inputs are 1000. The normal loss is 300. And the output is 700. When talking about the actual rate at which they purchase the raw material is, let's say, 4 and 5. So this will be 2800. This will be 1500. So aggregate, it will be 4300. So this much information will always be given in the question. And the question will ask you guys to calculate the variances. Now, to calculate the variances, . Now, to calculate the variances, the data should be comparable. This data is given for 80 units of output, and this data is given for 700 units of output. Since the output is not same, so we can't calculate the variances directly. We have to make it comparable. We have to convert this 80 units budgeted data into 700 units data, so that we can compare to manufacture these 700 units, how much cost we were supposed to incur and how much cost that is actually incurred. So let's convert this 80 units data into 700. So we'll prepare revised budget or revised standard. So as for the question, there is an input of 60 for every 80 units of output. I repeat again, for raw material X, raw material X requirement is how much? 60 kgs for every 80 units of output. So for 700 units of output, how much raw material we were supposed to use? So we call it a standard quantity. So we were using 60 kgs for 80 units of output. So for 700 units of output, how much quantity we were supposed to use? 525. Similarly, for Y also, we were supposed to use 40 kgs for 80 units of output. So for 700 units of output, how much quantity we were supposed to use? 350. So in short, to manufacture 700 units of output, we were supposed to use 525 kgs of X and 350 kgs of Y. And these were supposed to be used at the rate 5 and 4. And the total input that we were supposed to use is 875. So the total cost of X should be 2625, and this should be 1400. That is 4025. So in short, for 700 units of output, we were supposed to spend 4025, but the amount what we actually spent is 4300. That is 275 rupees extra is my cost. So hence, the cost is much more than what we expected. So we can say this extra cost is basically the material cost variance. So when talking about material cost variance, the cost we were supposed to incur is 4025. The cost we actually incurred is 4300. So how much extra cost we incurred? 275. So this 275 is the extra cost. So we will call it as adverse. So variance can be classified in two parts, favorable and adverse. If the actual cost is more than the standard cost, we will call it as adverse. And if the actual cost is less than my standard cost, we will call it as favorable. So herein, when talking about material cost variance, it is 4025 minus 4300. 4025 is what? My standard cost. And 4300 is what? My actual cost. So this is all what about material cost variance. Next is material price variance. Next is material price variance. Now, when talking about the price variance, the name itself says it is price. So we will just find out the difference of the price only. So X, it is 5 minus 4. The price we were supposed to pay is 5, but the price what we actually paid is 4. For how much quantity we actually paid the price? 700. So herein we have to take the actual quantity. I have discussed in detail in my regular batch why we are taking actual quantity. So for you can refer my regular batch. So Just for your knowledge purpose, we will be taking the actual quantity only. Similarly, for Y, it is 4. We were supposed to spend minus the amount what we actually spent is 5 into my actual quantity, that is 300. So this variance will be 700 favorable and this will be 300 adverse. So net it will be 400 favorable. So when talking about price variance, it talks about the variation in the price, the variance due to change in price. Moving towards the next part. Next is material usage variance. It talks about the variance due to change in usage. So herein the quantity for X we were supposed to use is 525. The quantity what we actually used is 700 into the standard price. Again, the standard price is the key because herein the usage variance consider only the usage part. If we take the actual price, then it will give the impact of the price what we actually paid. So their performance will be evaluated separately on the basis of usage and will be taking the standard price only. That is 525 minus 700 into the standard price. Again, why I'm taking standard price specifically, I have discussed this part in detail in my regular batch. So you can refer my regular session. So when talking about the usage of material usage variance, how much quantity we were supposed to use minus the quantity what we actually used into the standard price. Similarly for Y also, the quantity we were supposed to use is 350. The quantity what we actually used is 300 into my price, that is 4. So this will be 675 adverse. Now see, my total material cost variance is 275 adverse. My price is 400 and usage is 675. So guys, material price plus material usage will be the cost variance. I repeat again, material price variance plus material usage variance will be what? My cost variance. So here in 400 favorable and 675 adverse will be net 275 adverse. Now again two parts. Material mix variance and material yield variance. Now, when talking about mix variance, it talks about the variance due to change in mix. Now, see, my actual input is 1000. It should be in the ratio of 60 is to 40. This should be the mix of 1000. So, when talking about mix, how much should be my mix for X and Y? For 1000 in the ratio of 60 is to 40, that is 600 is to 400. But my actual mix is how much? 700 is to 300. So this variance talks about the change in mix. That is mix की वजह से कितना variance आया. Again, we'll be taking the standard price only here also. So this will be 500 adverse and this will be 400 favorable. So net will be 100 adverse. So the material mix variance, the name itself says the variance due to change in mix. So herein many students faces problem in material mix and variance, mix variance and yield variance. So very important guys, when talking about mix variance, total actual quantity is 1000. It should be in the ratio of standard mix. I'm writing this also for your reference. 1000 should be in the ratio of 60 is to 40. That is 600 is to 400 for X and Y. When talking about actual mix, that is my actual quantity, and accordingly we will calculate material yield variance. Sorry, mix variance. Moving towards the last part, that is material yield variance. Very simple, guys. There are 2 to 3 ways to calculate material yield variance. There are 2 to 3 ways to calculate material yield variance. But I'm just discussing the simplest way. That is to manufacture 700 units of output. To manufacture 700 units of output, how much aggregate input was required? 875 kgs. This much quantity we were supposed to use to manufacture 700 units of output. And the quantity what we actually use to manufacture 700 units of output is how much? 1000. That is 125 kgs extra we consume. Now these 125 kgs can be of X also, can be of Y also. So which price we should take? So the best approach is take the weighted average price. That is 525 into 5 plus 350 into 4. The total is 4025 for 875 quantity. So 4025 for 875 quantity. So this will be 575 adverse. There are again 2 to 3 more ways to calculate yield variance, but this is the easiest possible way to solve material yield variance. So guys, this is all what about material variance, that is material cost variance, price variance, usage variance, mix variance and yield variance. For verification, you can say price plus usage will be cost and mix plus yield will be usage. I repeat again, material price plus usage will be cost. So 400 adverse, 400 favorable plus 675 adverse will be net 275 adverse, and herein also 100 adverse and 575 adverse will be 675 adverse. So mix plus yield will be usage, usage plus price will be my cost variance. This is the way to solve the question. Again, since we have discussed the concepts, so you can prepare the formulas also. So for material cost variance, it is standard cost minus actual cost. So when talking about standard cost, it is standard quantity into standard price minus actual quantity into actual price. Further, when talking about price variance, again, we talks about the difference in the price. So it is the price what we were supposed to pay minus the price what we actually paid into my actual quantity. When talking about usage also, the quantity we were supposed to use, that is my standard quantity minus the quantity what we actually used into my standard price. When talking about mix variance also, what should be my mix? Minus my actual mix is basically my actual quantity into standard price. When talking about yield variance also, it is standard quantity minus standard mix into standard price. But again, as I said, there are 2 to 3 more ways. So this is one of the way, and then you can calculate it in this way also. So this is all what about material variance. If you guys have any doubts or queries, you guys can post your queries. Giving you 5 minutes time to just recollect what I have discussed till now. You can post your queries in the meanwhile, and further I request you guys, those who want to copy also can please copy the same. I'm waiting for your queries, guys. Waiting for your queries, my friends. So fine, guys, we are done with material variance. So let's proceed further with the next part, that is labor variance. So let's start with labor variances. Now, just like material variance, the concepts of labor variances are more or less same. And further, when talking about material variance and labor variance, the basis of comparison is output. The basis of comparison is what? Output. Both in material and labor variance, the basis of comparison is basically my output. So to calculate the variance, my output should be same. If the output is not same, we have to prepare revised standard. So let's start with this question. One question. Let's start with the concept of labor variance with the help of a question. So when talking about the information that is given in the question, this much information will always be given in the question. That is my budgeted data and actual data. So let's say three types of labors are required to manufacture 1 unit of a product. Skilled, semi-skilled, and unskilled. So 2 hours of skilled, 3 hours of semi-skilled, and 5 hours of unskilled labor is required to manufacture 1 unit of product. When talking about the rate, what we have to pay them, so they are to be paid as 5 rupees, 3 rupees, and 2 rupees. So this is the budgeted data to manufacture 1 unit of a product. This is the budgeted data given to manufacture 1 unit of a product. When talking about the actual data, this will always be given in the question. Let's say the output is also given in the question, that is 5,000 units. So actually we manufacture 5,000 units and actual hours consumed, the rate paid, and the total amount will always be given. So let's say 9,000, 17,000, and 30,000. So in aggregate, 56,000 hours we worked to manufacture 5,000 units. When talking about the rate, let's say it is 7, it is 2.75, and it is 1.5. So this will be 63,000 This will be 45,000. This will be 46,750. And the total amount will be 154,750. So this much data will be generally given in the question. Now again, we have to calculate the variances. So to calculate the variances, the figure should be comparable. So just like material in labor also, the basis of comparison is output. So herein this data is given for 1 unit of output. This data is given for 5,000 units of output. So what we have to do, this 1 unit data will be converted into 5,000 units data. So the management targeted that for manufacturing every 1 unit, 2 hours of skilled labors are required. So herein for 5,000 units, how much hours we were supposed to use? 10,000 hours at the rate 5. For semi-skilled, 1 unit, 3 hours. So for 5,000 units, it should be 15,000 hours. And in this case, it will be 25,000 hours. So aggregate for manufacturing 5,000 units, we should have worked for 50,000 hours, and my cost should be 1,45,000. But actually, we worked for 56,000 hours, and my actual cost was 1,54,750. Now, let's say apart from this much of information, let's say idle hours are also given in the question. The information is given in the question as regards idle hours. Let's say idle hours are given for skilled, semi-skilled, and unskilled. Let's say 500 hours, 400 hours, and 100 hours. So this is basically my hours, paid hours. So this is how we will get my actual hours worked also. This is actual hours paid and actual hours worked. If the idle hours are not given, we can straight away start solving the question with the same concepts what we have applied in material variance. But since idle hours are given, so there will be a bit of change in the concepts. Rest everything will be same. So idle hours are given, so we'll be able to calculate the actual hours worked. So in this case, it will be 8,500. In this case, it will be 16,600. And in this case, it will be 29,900. So ours will be 55,000. Now let's start calculating the variances. So the first variance what we will calculate is labor cost variance. In the similar way what we discussed in material variance. So labor cost variance will be again standard cost minus my actual cost. So my standard cost is 1,45,000. That is कितना खर्च होना चाहिए था to manufacture 5,000 units. The amount what we actually spend is 154,750. So how much extra we have spent? 9,750. And this variance will be adverse. So this is all what about labor cost variance. When talking about the labor cost variance, how much amount we should have spent to manufacture 5,000 units, then the amount that is actually spent to manufacture 5,000 units. Now let's proceed further. Herein we used to calculate material price variance. So instead of price, it will be labor rate variance. Instead of price, it will be labor rate variance. So let's calculate skilled, semi-skilled, and unskilled. So just like material, the rate at which we were supposed to pay 5, the rate that is actually paid is 7 into my actual hours paid, that is 9,000. So this will be 18,000 adverse. Next is 3 minus 2.75 into the hours actually paid is 17,000. This will be 4,250 favorable. Third, it is 2 minus 1.5 into 30,000. So it will be 15,000 favorable. So 15 plus 4, 19,250 is favorable and 18,000 is adverse. So net favorable will be 1,250. We are done with labor rate variances. Again, the concept is same, just like material. That is, it talks about the difference in rate into my actual hours paid. Moving towards the next part, that is idle time variance. Again, idle time variance will always be adverse because idle hours are always a loss to the company. So let's calculate the idle time variance. So idle hours are 500, 400, and 100. Herein, we'll be taking the standard rates only, that is 5, 3, and 2. So this will be 2,500 adverse, 1,200 adverse, and 200 adverse. So this is all what about idle time variance. So idle time variance is basically calculated on idle hours, and we'll be applying the standard rate only. And why we are applying the standard rate, this part also we have discussed in detail in my regular batch. Now herein also next part is labor time variance. See, herein we used to calculate material usage variance. So instead of usage, it will be labor time variance or efficiency variance. Again, the concept will be the same. Now, very important, guys, labor time or efficiency variance will be calculated using, it talks about, see, in usage, the quantity we were supposed to use minus the quantity what we actually used. So for time variance, also the time what we were supposed to work and the time we actually worked. So herein for time variance, instead of hours paid, will be considering the hours worked. So it talks about the difference in time worked. So herein it will be standard hours minus actual hours worked. minus the actual hours worked were 8,500 into the rate will be again the standard only 5, 3, and 2. Again, very important, guys. Labor rate plus labor time, sorry, labor rate plus idle time plus labor efficiency or time variance will be equal to cost. So here in 1250 plus 1250 favorable plus 3900 adverse plus 7100 adverse will be equal to 9750 adverse. So if the idle time is not given in the question, no need to calculate idle time variance. Very important, guys. If the idle time is not given, the concept will be same, just like what we discussed in material. There will be no change in the concepts, only the name will change, not the concepts. So we are done with the idle time variance now. Sorry, time variance or efficiency variance. Let's proceed further. So herein we used to calculate material mix variance. So this will be labor mix variance. Herein it will be labor mix variance. When talking so when talking about the concept, again it's the same. It's 55,000 in the, it should be in the ratio of 2 is to 3 is to 5. 55,000 should be in the ratio of 2 is to 3 is to 5. So this should be scaled. This should be 11,000. This should be the ratio, and whereas the actual ratio is 8,500 into the rate is 5, 3, and 2. So the labor mix variance, very simple, guys. 55,000 should be in the ratio of 2:3:5. That is 11,000, 16,500, and 27,500. Whereas my actual mix was 8,500, 16,600, and 29,900 into the rate that is 5, 3, and 2. So this will be 12,500 favorable. This will be 300 adverse. And this will be 2,400 adverse. Sorry, 4,800 adverse. Now, the next part, that is labor yield variance. Or efficiency variance also we can say. Or sub-efficiency also we can say. Again, the same concept, these 5,000 units should be manufactured in overall 50,000 hours. But we completed the work in 55,000 hours. That is 5,000 hours extra we consumed into the weighted average rate. So this will be 14,500 adverse. So again, the concepts are same. The difference is basically of idle time only. If you guys have any doubts or queries, you guys can post your queries. Again, there are formulas that are given in study material. So let's start with the formulas also. Thereafter, I'll give you time to write. And in the meanwhile, if you guys have any doubts or queries, you guys can post your queries. So when talking about labor cost variance, it is standard cost minus actual cost. So how come we will get the standard cost? That is standard hours into standard rate minus actual cost will be actual hour into actual rate. When talking about rate variance, again standard rate minus actual rate. Instead of price, we'll be using the rate only, standard rate minus actual rate into actual hours paid. See, herein there are two actual hours paid and actual hours worked because of the idle hours. If idle hours are not given, simply we can write actual hours. But herein the idle hours are given, so actual hours paid are different and actual hours worked are different. When talking about idle time variance, it is when talking about idle time variance, it is idle hours into standard rate. Time variance, again, the hours we were supposed to work minus the hours we actually worked. So hours we were supposed to work minus actual hours worked into my standard rate. Mix, standard mix minus actual hour worked into standard rate. And yield also the same, standard hours minus standard mix into standard rate. So this is the way the formulas are given in the study material. As I mentioned in the regular batch also and in all the sessions, there are no formulas in standard costing. If you so try to memorize the concept. Initially, you will find it a bit difficult, but trust me, if you'll practice, practice is the key. If you'll practice, you'll be able to solve any question easily. So I request you guys to copy the explanation. In the meanwhile, those who have any doubts or queries, you guys can post your queries. One more point I want to discuss. Instead of placing idle hours here, we can place the idle hours here also. There will be, yes, the solution will change a bit, but conceptually both the approaches are correct. If we place the idle time variance here, the labor efficiency variance will be calculated using actual hours paid. Rest, there will be no change. So instead of placing idle time variance here, we can place it at the third level also. Both the approaches are correct. One more point, guys, labor mix plus yield will be time. So 7,400 favorable and 14,500 adverse will be 7,100 adverse. So mix plus yield will be time. Time plus idle time variance plus labor rate variance will be my cost variance. So you can cross verify the solution also. So now giving you 5 minutes time to copy, and in the meanwhile, those who have any doubts or queries, you guys can post your queries. Okay, so let me check, Kavisha. Just give me a minute. Kavisha, can you please unmute yourself and can speak to me? Where exactly you are finding it difficult? Yes,
Uh,
Kavisha?
yes, sir. In this study module, we have an illustration 7.
Yes, Kavisha.
So we have a part B of it. Also show the effect on labor rate variance.
Yes. Also
Uh,
show the effect on labor rate variance if 5,000 hours of skilled are paid at the rate 5.5 and balance were paid at the rate 7 per hour. So what you want me to
uh,
discuss? The rate
yes,
part
sir.
or yield
Only
variance?
the rate part. Only the rate part.
Okay, because you have mentioned yield variance, so there will be no impact on yield variance.
No, yield variance was another topic, but I got it. Actually, I got disconnected for a moment, so I missed that part, but I got it by seeing the explanation.
Any doubts in the yield variance? Because this is the point where most of the students make the mistake. Yield and mix variance. These two parts are very important and many students make mistake in these two parts. I hope you are thorough with the explanation.
Yes, so now it's clear.
Okay, so see, let me discuss this part, illustration number 7. So NPX Limited uses standard costing for manufacturing of its product X. Following is the budgeted data given, that is 235 and 643 is the rate. In the month of January, 10,000 units were produced from the following details, and the data is given as skilled labors 18,000, semi-skilled 33,000, and unskilled 58,000. The total is 1,09,000, and the rate is given. Actual idle hours are given abnormal during the month. So also show the effect on labor variance if the 5,000 hours of skilled labor are paid at the rate 5.5 and balance were at the rate rupees 7. So they here exactly you're finding it difficult, right?
Yes, sir.
Okay, see, What is labor rate variance? Standard rate minus actual rate into actual hours, right? Yes, Kavisha, I'm speaking to you.
Yes,
You will
sir.
be only able to solve. Don't worry. So see,
Oh,
when talking about the rate variance, it is standard rate minus the actual rate into actual hours. See, so see in the question given, also show the effect on labor rate variance if 5,000 hours of skilled labor are paid at the rate 5.5 and balance were paid at the rate 7. Right? This is the question given. Okay. So see, I'm just discussing this part here only. Those who want to copy this part can please copy, then I'll be explaining this part. Wait for 2 to 3 minutes, Kavita.
yes, sir.
So see, in illustration number 7, as I discussed, this should be the rate minus the rate actually paid into actual hour. So standard rate minus actual rate into actual hours. So skilled, semi-skilled, and unskilled. Now see, standard rate is rupees 2, 3, and 5. 2, 3, and 5. When talking about the actual rate, it is given 7, 3.5, and 4. But there is a change in question in part B. Also show the effect if the labor rate variance is if the 5,000 hours of skilled labor are paid at the rate 5.5 and balance were paid at the rate 7 per hour. So there is a change in actual data wherein skilled, semi-skilled, and unskilled. It is given in the question the skilled hours are skilled, semi-skilled, and unskilled. So semi-skilled is no change, 33,000. They were paid at the rate 3.5. Unskilled were 58,000 hours. They were paid at the rate 4. And for skilled hours, they are given that total 18,000 hours they worked. But for 5,000 hours, they were paid at the rate. For 5,000 hours, they were paid at the rate 5.5 and balance at 7. Balance hours means what? Total skilled hours were 18,000. So 18,000 minus 5, that is 13,000. So this is the data given. So when talking about semi-skilled, there will be no change. That is 3 minus 3.5 into 33,000 hours. For unskilled also 5 minus 4 into 58,000 hours. But for skilled, it is 2 minus 5.5 for 5,000 hours and 2 minus 7 for 13,000 hours. Sorry, the rate is 6, 4, and 3. Sorry. So the standard rate is 6, 4, and 3. So we were supposed to pay at the rate 6, but we paid 5.5 for 5,000 hours. And we were supposed to pay 6, but we paid 7 rupees for 13,000 hours. This is for the skilled. For semi-skilled, we were supposed to pay at the rate 4, but we actually paid at the rate 3.5 for 33,000 hours. And similarly, for unskilled also, we were supposed to pay at the rate 3, but we actually paid at the rate 4 for 58,000 hours. So this will be for skilled, this will be for semi-skilled, this will be for unskilled. I hope, Kavita, your query is resolved.
Yes, sir.
So there is where exactly you are finding it difficult?
So actually, I was confused in like how to bifurcate it. After 5,000, from what should I subtract
Total
the
hours were
5,000 from?
18,000. For skilled, the total hours were 18,000. Of this 5,000 hours, they are actually paying at the rate 5.5. And for 13,000 hours, they were paying at the rate rupees 7. Okay.
Yes, sir.
Anything else in labor variances? You have any doubts or queries in labor variance? You are able to solve question number 8?
Yes, sir.
Okay, any other doubts or queries in material and labor variances in study material or anything else?
So there are the typical questions of missing values.
Okay, so you are not being
Variances were
able to solve the
given.
questions on missing values.
Yeah, just like how can we start it? Like the starting of the question, it's difficult.
See, have you ever checked all my lectures, recorded lectures over YouTube?
No, so this is my first lectures of you. Like yesterday was the first lecture, that fortnight program,
Yeah, yeah,
and
yeah.
today is the second lectures of yours.
And when is your attempt?
January 26.
Okay, January 26th. So see, Kavisha, what you do is just check my recorded session. I have discussed each and every concept in detail, and I have solved all the question using a uniform format only. I mean, how to solve all the question, because see, when you will check the study material, you will find different format for every question, right? The format of the question is given, but the solution format is different. So just check out my recorded session, Kavisha. You'll find this chapter very easy and very interesting, because I have covered all the concepts in detail rather than the formulas. And further, I have discussed many questions on missing figure also. So the point is, again, you have to be thorough with the concepts. Once you are done with the concept, then try to solve missing figure question. Specifically in material and labor variance, try to convert the question in this format, that is budget and actual. If the budgeted output and actual output is same, you can start straight away start with the calculating the variance. But if the budgeted output and actual output is different, then prepare revised standard. And once this revised standard is prepared, you can solve the question. So just try to prepare the question in this format. Trust me, you'll be able to solve all the missing figure questions also. Try to place the figures in this table. That is the key,
Okay, sir.
right? So just check my recorded session. Still, if you have any doubts or queries, just write a mail addressing my name, cma-inter@icai.in. I'll be there to help you out with it. Anything else? Rest, you are done with standard costing on your own?
Yes, sir.
Okay, great. So just check out my recorded sessions on standard costing. You'll be able to solve the questions. Don't worry.
Sure, sir.
Yeah. Anyone else with any doubts or queries over the portal? Those who are watching over the portal, anyone with any doubts or queries? Waiting for your queries, friends. So fine, guys, we are done with material variance and labor variance. let's take a break of 15 minutes. I'll be back after 15 minutes with the concept of fixed and variable overhead variance. In the meanwhile, those who are watching over YouTube or via any other media, you can come over Zoom and you can speak to me. You can post your queries. I'm here to address all your queries. If you guys want me to solve any particular question, I'll be discussing that question also. So let's take a break of 15 minutes. Edwin sir. Edwin sir, are you there? Nisarg sir? Nisarg sir, are you there? Please put the break. Thank you. Sir, shall we start? Nisarg sir, shall we start? Sir, are you there? Shall we start? Welcome back, my friends. So we are done with the material and labor variances. So let's move towards the next part wherein we'll be discussing fixed and variable overhead variances. So let's start with fixed overhead variances. Now see guys, whenever you find a question on fixed overhead variance, try to convert the question in a tabular form. In most of the cases, the question will be given in the tabular form. But if the question is not given in the tabular form, try to convert the question in tabular form, wherein the data will be given in two parts, budget and actual. Let's say that budgeted days are 25 and actual days are 26. Sorry. So this is the maximum information that will be given in the question, and using this information, we have to calculate all the variances. So herein the information is given as regards days, hours, units, fixed overheads, and idle hours. So let's start with the calculation of fixed overhead variances. So the first variance what we do calculate is fixed overhead cost variance. The first variance what we'll be calculating is fixed overhead cost variance. That is how much overheads we were supposed to absorb and actual overheads. So 45,000 are my overheads for 30,000 units. So for 32,500, how much should be my overheads? These are basically my absorbed overheads. Minus actual overheads. Actual overheads are 50,000. When talking about fixed overhead cost variance, it basically talks about the under or over absorption of overhead. So my absorbed overheads are 48,750 minus my actual overheads are 50,000. So this will be 1,250 adverse. Next is fixed overhead expenditure variance. Very simple, guys. It is 45,000 minus 50,000. That is 5,000 hours. The next part is fixed overhead volume variance. When talking about volume variance, friends, volume talks about units. Volume talks about the number of units. How many units we were supposed to manufacture and how many units we actually manufactured. So 30,000 units we were supposed to manufacture minus the units actually manufactured were 32,500 units. I repeat again, when talking about volume variance, the units we were supposed to manufacture were 30,000 units, and the units what we actually manufactured were 32,500 units. That is 2,500 units extra we manufactured. It's a very good sign for the company. I repeat again, guys, when talking about volume variance, it talks about the units. So, as per the targets set by the company, we were supposed to manufacture only 30,000 units. But when the actual data was out, we were actually manufactured 32,500 units. 2,500 units extra we manufactured. So it's a good sign for the company. So this variance will be favorable. Now, again, we have to convert this data in monetary form. So we'll be taking the budgeted rate per unit only, that is 45,000 divided by 30,000, that is 1.5 per unit. So this will be 3750 favorable. So fixed overhead volume variance, it talks about units. If the actual units manufactured are more than the budgeted units, the variance will be favorable. However, if the actual units are less than the budgeted units, this variance will be adverse. Further, since we have to present this variance in monetary terms, so we'll be applying the rate per unit, and herein onwards, it will be using the budgeted rate per unit only. Now, next is fixed overhead calendar variance. When talking about calendar, it talks about days. That is how many days we were supposed to work and the days we actually worked. So how many days we were supposed to work? 25 days. And the days what we actually worked were 26. That is one day extra we worked. So forget about efficiency or inefficiency. When talking about days prospect, my workers were supposed to work for 25 days, but they actually worked for 26 days. One day extra they worked. So it's a good sign for the company. So this variance will be favorable. Now further this we have to present this variance in monetary terms. So since it is days, so we'll be applying the budgeted rate per day. See herein it was units, so we applied the rate per unit. So herein it is days, so we'll be applying the rate per day. So 45,000 divided by 25 days. That is 1,800 per day. Again, since our actual days work were much more than what we expected, so forget about efficiency inefficiency. From days perspective, we worked for an extra day, so this variance will be favorable. Now next is fixed overhead capacity variance. When talking about capacity, it talks about hours. That is how many hours we were supposed to work and how many hours we actually worked. So straight away, if we look that there are 30,000 hours we were supposed to work, but we actually work for 33,000 hours, that is 3,000 hours extra. But this is not the case. See, herein 30,000 hours were for 25 days. So for 26 days, what we actually worked, how much should be my days and the actual, how much should be my hours and how much is my actual hours. So see, I'm writing this for better understanding, wherein we have the capacity to work for how many hours? 30,000 hours are for 25 days. So for 26 days, how many hours? We have the capacity to work for 31,200 hours in 26 days. However, we worked for 33,000 hours in 26 days. That is 1,800 hours above my capacity. Therefore, 1,800 hours, since it is hours, so we'll be taking the rate per hour, that is 1.5 per hour. So this variance will be favorable. Again, this variance is the key. I repeat again, forget about efficiency or inefficiency. When talking from hours perspective, my hours capacity was how much? My hourly capacity was how much? 31,200 hours. My capacity was to work for 31,200 hours. But in 26 days, I work for 33,000 hours. That is 1,800 hours extra I worked. 1,800 hours extra I worked than my capacity. So that's why this variance will be favorable. Very important. Forget about efficiency or inefficiency. I worked for 1,800 hours extra than my capacity. That's why this variance will be favorable. So this is the way to calculate capacity variance. I repeat again, we have the capacity to work for 31,200 hours in 26 days. However, we work for 33,000 hours in 26 days. That is 1,800 hours above my capacity. That's why this variance is favorable. Very important. Many students make mistake in this variance that, sir, if the figure is minus, this should be adverse. But no, it's not the case. Herein, we worked above our capacity. Our capacity was for 31,200 hours, but we actually worked for 33,000 hours. That is 1,800 hours we worked above our capacity. That's why this variance will be favorable.
So,
Yes.
so in the fixed overhead capacity variance, in the last step, the rate with which we have multiplied it with,
It is
is
rate
it
per
the
hour.
same
See,
rate? Is it
see,
the
see,
same
see,
rate
see,
as
see.
we calculated in volume variance?
1 second. 45,000 divided by 30,000. How much it is?
1.5.
It is what? Per unit?
Yes, sir.
Okay. Here we have calculated what?
Oh, per day.
Day. So 45,000 divided by 25 days. So this will be the rate per day, right?
Yes, sir.
Herein it is what? 1,800
Hours.
hours. So 45,000 divided by hours are how much?
30,000 hours. Okay.
So herein the figures are same. That's why don't get confused. If it is units, we will be applying the rate per unit. If it is hours, we'll be applying the rate per hour.
Okay, sir.
Perfect? Next is idle time variance. How much are my idle hours? 200 hours. We have to apply the rate per hour, that is 1.5 per hour. So this will be 300 adverse. Now the last but not least, efficiency variance. When talking about efficiency variance, see, 30,000 units should take 30,000 hours. This was the target that was given to the company, wherein we have to manufacture 30,000 units in 30,000 hours. So it means 1 unit should be completed in how many hours? 1 hour. So the actual production was for 32,500 units. It means we should have taken 32,500 hours only. The work was supposed to be completed in 32,500 hours only. But actually we took how many hours? 33,000 hours. Now see, out of 33,000 hours, 200 hours are my idle time. It means what? Actually we took how many hours? Because see, 200 hours idle time we have already considered in idle time variance. So it is 32,800 hours we actually took. It means 300 hours is my inefficiency. Total hours extra what we consumed were 500. Out of the 500 hours, 200 hours are my idle time that we have considered in idle time variance, and 300 hours is my inefficiency. Into we have to apply the rate per hour. So this will be 450 hours. Very important, if idle hours are not given in the question. If idle hours are not given in the question, then the entire 500 hours will be my inefficiency. I repeat again, if the idle hours are not given in the question, then the overall difference is of how much? 32,500 hours minus 33,000 hours. 500 hours will be my inefficiency, and my efficiency variance will be basically 750 hours. But out of this 500 extra hours, 200 hours is due to idle time and 300 hours is my inefficiency. That's why these two separate variances. Kavisha, I hope this part is clear to you.
Yes, sir.
Okay. Any other doubts or queries in this part? I request you, Kavisha, to copy this explanation because again, this explanation is the key. You are memorizing the formula or you are just referring the concepts, Kavisha, before?
So till yesterday I was remembering the formulas, but I got the concept understanding yesterday.
Okay. So you attended the session. I mean, पूरा आपने session attend किया था क्या?
हाँ सर.
Okay, no worries. So just write down, write down this basically the master table and write down what you have understood in your notebook because it will help you to revise. So whatever the concepts I have explained, just like see cost variance, 45,000 overheads for 30,000 units. So for 32,500 units, how much should be my absorbed overheads? 48,750. My actual overheads are 50,000. So 1250 is basically under or over absorption of overhead. Fixed overhead expenditure variance, since fixed overhead remain constant at all the level of production. So straight away, 45,000 should be my overhead and 50,000 are my actual overhead. So this is 5,000 adverse. When talking about volume, it talks about units. That is how many units we were supposed to manufacture, 30,000 units. Actual units manufactured were how much? 32,500. Extra units what we manufactured is 2,500. Since we manufactured extra units, so it's a great job what we did. So that's why this variance will be favorable. The same concept we will apply to calendar also, wherein we were supposed to work for 25 days, but we actually work for 26 days. 1 day extra we worked. So it's a good sign for the company. So that's why this variance will be favorable. Again, capacity variance, we have to give the impact of the days also. Apart from hours, we have to give the impact of the days also. So 30,000 hours in 25 days. So in 26 days, my capacity was of 31,200 hours. But in these 26 days, I worked for how many hours? 33,000 hours. 1,800 hours extra over and above my capacity. And again, this variance will be favorable. So we have to apply the per hour rate, then idle time variance and efficiency. Efficiency variance is very important, wherein 30,000 units, 30,000 hours. 1 unit, 1 hour. So 30 to 500 units, how much hours we should have consumed? 30 to 500 hours. But we actually completed the work in 33,000 hours. 500 hours extra we took. Of this 500 hours, 200 hours is my idle time and 300 hours is my inefficiency. So this is how these variance will be calculated. Apart from this, guys, very important, calendar, capacity, idle time and efficiency will be volume, and volume plus expenditure will be cost. So you can cross verify the solution also. So giving you 5 to 7 minutes time to copy this explanation. In the meanwhile, Those who are attending for the first time, you can write down the concepts in your book, giving you 5 to 7 minutes time. Now in fixed overhead variance also, see, if hours, units and fixed overheads are only given. See, I have explained this part in detail that if idle hours are not given, then the entire extra hours will be my inefficiency. Now let's take a situation wherein the days are not given in the question. If the days are not given in the question, then very simple, there will be no change in cost variance, expenditure variance and volume variance. Further, we will not be able to calculate calendar variance because the calendar's variance is dependent upon the number of days. So calendar variance we won't be able to calculate, but yes, capacity variance we will calculate. When talking about capacity variance, since the days are not given, so we will assume that the number of days are same. So we can straight away say that our capacity was to work for 30,000 hours, but we actually worked for 33,000 hours. That is 3,000 hours above my capacity I worked into the rate per hour, that is 1.5 per hour. So this variance will be 4,500 favorable. I repeat again, since the number of days are missing, so straight away we can calculate the capacity variance as that my capacity was to work for 30,000 hours, but I actually work for 33,000 hours. That is 3,000 hours over and above my capacity. 3,000 hours I worked above my capacity. So this variance will be favorable, and since it is hours, so we'll be applying the rate per hour. Again, efficiency, no change. It will be the same. That is 30,000 units, 30,000 hours. So 1 unit, 1 hour. So for 32,500 units, we should have taken 32,500 hours only. But actually, we took 33,000 hours. So the work was supposed to be completed in 32,500 hours, but we actually completed it in 33,000 hours. So 500 hours is my inefficiency. We have to apply the rate per hour. So this will be 750 adverse. Again, capacity and efficiency will be volume. Volume and expenditure will be cost. I request you guys to copy this explanation. In the meanwhile, those who have any doubts or queries, you guys can post your queries.
So,
Yes, Kavisha, tell me.
so can you please explain illustration 12 of the module?
1 second. Okay, I'll discuss illustration number 12. So anyways, this part is, I hope it is clear to all. Anyone with any doubts or queries, you guys can post it over the portal. Let me complete the variable overhead variance, then I'll discuss illustration number 12.
Sure, sir.
One more point, friends. Let's say hours are not given and days are given. So how to deal with it? So herein no change will be in cost, expenditure and volume. When talking about calendar variance, it will be same, that is 1 day into 1800 per day. So this will be 1800 favorable. There will be no capacity variance. However, efficiency variance will be calculated using the number of days. So 30,000 units in 25 days. So in 26 days, we were supposed to manufacture how many units? 31,200 units. But we actually manufactured 32,500 units. That is 1,300 units extra we manufactured into the rate per unit is 1.5. So this will be 1950 favorable. Again, I repeat, 30,000 units in 25 days. So in 26 days, we were supposed to manufacture 31,200 units, but we actually manufactured 32,500 units. That is 1,300 units extra we manufactured. So it's a sign of efficiency. We'll multiply, we'll apply the rate per unit and we'll get the variance, and that variance will be favorable. So 1950 favorable. Again, calendar plus efficiency will be volume, volume plus expenditure will be cost. I request you guys to copy this explanation, please. So this is all what about fixed overhead. Moving towards the next part, the easiest part of the chapter, that is variable overhead. Again, whenever you find a question on variable overhead, try to convert it in tabular form. The information will be given in the most of the cases, the information will be given in tabular form only. So R's will be given in the question, units will be given in the question. And variable overheads will be given in the question. Let's say R's are given 30,000 and 33,000. Units are given, let's say 30,000 and 32,500. And overheads are given 60,000 and 75,000. 80,000. Let's keep it 80,000. So again, first one is variable overhead cost variance. It talks about under or over absorption of overheads. So it is 60,000 overheads for 30,000 units. So for 32,500 units, how much should be my overhead? 65,000. And my actual overheads are 80,000. So this will be 15,000 adverse. The concept are just like fixed overhead. That is 60,000 overheads. 60,000 should be my overheads for 30,000 units. It means the absorption rate is rupees 2 per unit. So the total units manufactured were 32,500. It means 65,000 should be my absorbed overheads, and my actual overheads are 80,000. So this is 15,000 extra. So this will be adverse. Now fixed overhead, sorry. Next is variable overhead expenditure variance. Now see, variable overheads keeps on changing depending upon the units manufactured and hours worked. So herein we have to give the impact of the hours also. So here in 60, see fixed overheads, it was straight away. That is, this much should be my budgeted overheads and this is my actual overheads. But variable overheads keeps on changing. So 60,000 overheads for 30,000 hours. So for 33,000 hours, how much should be my overheads minus my actual overheads, that is 80,000. So my overhead should be how much? 66,000 minus 80,000. So this will be 14,000 adverse. So this is all what about expenditure variance. Next is efficiency variance. The calculation will be similar to the fixed overhead efficiency variance, wherein 1 unit 1 hour, 32,500 unit 32,500 hours. Actually, we consumed how many hours? 33,000 hours. So 500 hours is my inefficiency into the rate per hour is 60,000 divided by 30,000, that is 2 per hour. So this will be 1,000 adverse. Again, expenditure plus efficiency will be my cost variance. So the concept are more or less similar to the fixed overhead variances, but the difference is here at expenditure variance only, wherein we have to give the impact of the hours. If you guys have any doubts or queries, you guys can post. Those who want to copy the solution can please copy the solution. Giving you 2 minutes time to copy. Just give me 2 minutes, guys. Yes, Kavisha. So which illustration you're talking about? Illustration number 12, right?
12. Yes, sir.
Okay, so where exactly you are finding it difficult? It's a very easy question. Yes, the format is a bit different from the conventional questions. So see, I'm discussing this part. You can solve it over the calculator also. So illustration number 12. See, as I always mentioned, focus on the concepts rather than memorizing the formula. So this question looks a bit lengthy, tricky, but it's not tricky. It's the easiest question, in fact. So see, the overheads expenses budget for a factory producing to a capacity of 200 unit per month is as follows, wherein the fixed overheads are given. The budgeted fixed overhead per unit is given, variable fixed overhead per unit is given, the total cost per unit is given, and the actual overheads are given. So yes, Kavisha, a first question from my end to you. How much will be my budgeted fixed overhead in aggregate? Yes,
3,000 into 200 units.
very good. Since in expenditure, we never just changes the fixed overhead. Straight away, we do take budgeted fixed overhead, right?
Yes.
But while calculating expense variance of variable overhead, we have to apply the actual hours or actual units, right? So
Yes.
herein, when talking about the variable overhead per unit, it is 1500, and the actual units manufactured are how much? 100 units, right?
100 units.
So what will be my variable overhead for expense variance?
1,50,000.
1500 into 100, 1,50,000. See,
Yes.
the difference between variable overheads and fixed overhead is variable overheads keeps on changing as per the production, but fixed overhead remain constant. So see herein, fixed overheads we have kept constant, but yes, variable overheads keeps on changing, right?
Yes, sir.
So in aggregate, what are my total overheads? 7,50,000. These are my basically the standard overheads or budgeted overheads, right? And my actual overheads are how much? 4, 5, 6, 7, 8, 4, 5, 6, 7, 8, 9, 10, 11,
11 lakh
15.
50.
So this is my expense variance, overhead expense variance, right?
Yes, sir.
Because the bifurcation is not given for actual fixed overhead and actual variable overhead. So we are calculating the overhead expense variance, right?
Yes, sir.
Now volume, it talks about units, right? You will
Yes.
only tell me the answer. What is volume variance, fixed overhead volume variance?
Fixed.
Explain,
Absorbed
explain,
overhead
explain.
minus.
It talks
Absorbed
about
overhead
what?
minus.
Units, right? How
Yes.
many units we were supposed to manufacture?
200 units.
How many units we actually
100.
manufactured?
100 units. Yes.
So how many units less we manufactured?
100 unit less.
We have to apply the budgeted rate for fixed overhead. The budgeted fixed overhead rate is how much?
3,000.
This variance will be favorable or adverse?
Adverse.
Because the actual units are less than budgeted units. So this variance will be adverse. So where exactly you are finding it difficult?
So actually the solution in the module is quite confusing. Now I'm getting it.
So the point is, Kavisha, I still suggest you specifically for standard costing and process costing, just refer my lectures. You will find the format very easy. And I have solved all the questions with uniform format. That is one format for all the solutions. For material variance also, I have solved the question using only one format. Labor also, again, all the question using one format. Fixed and variable also, the format what I have discussed in the concepts, I have followed the same format. Yes, the solutions are all correct, but yes, the presentation is bit different from my presentation. So I have just converted the problems in the easiest possible way.
Yes, sir.
Anything else?
So also in the practical question 7.
One second. Yes, tell me practical question number 7.
So what is production volume variance? Is it fixed or overhead or both?
Okay, production volume. When talking about volume variance, आपको ये कुछ concept सुनाई दिया क्या? Variable overhead volume variance.
नहीं.
तो फिर
Okay.
keep the thing simple. Examiner कुछ भी मतलब अतरंगी नहीं पूछता. Keep the thing simple. See again, when talking about this question, variable overhead per unit is 10. Fixed overhead per month is 1 lakh. Capacity of the plant is 20,000 units per month. Actual overheads incurred were 3 lakh. Actual output is 15,000. Just the copy paste of the same question.
Yes.
Right?
Yes, sir.
Again, see, you were able to solve practical question number 12.
12.
Just open practical question number 12.
Yes, sir. 12 was comparatively easy.
Again, just try to convert it in the format budget and actual, right?
Yes, sir.
See, 14th question is very good. So once you are, try to memorize the concept. I have discussed all these questions in classes. In fact, these missing figure questions also, I have discussed few good question in class. Apart from this, the study material questions also, if not in this current batch, in the previous batch, अगर आप मेरे 3-4 sessions देखेंगे ना standard costing के, तो each and every question of study material I have covered in either of the batch. And apart from this, I have put up many good and interesting questions in the live session. I have framed the question on immediate basis and I just told the students to solve, and many were able to solve also. So just refer my session specifically on standard costing, marginal costing, and process costing. Service costing is comparatively much more easier than what I have discussed. Apart from this, my recorded sessions are there for material costing also. So you can check my recorded session on material costing. Material I have taken, overheads I have taken, activity based costing I have taken, cost sheet I have taken, then process is there, service is there, budgetary control also I have taken. So I've taken most of the chapter. You just write down my name, and still if you have any doubts, Kavisha, just write a mail to cma-enter@icai.in. I'm here to address all your queries. Don't worry.
Yes, sir.
Okay. Anyone else with any doubts or queries, friends? Start with the basic question, Kavisha. Start with the very basic question and then proceed for missing figure based question. Again, missing figure based question you will be able to solve only when you are thorough with the concept, and with the help of concept you can frame formulas. So both these points are very important.
Yes, sir.
Anyone else with any doubts or queries? Giving you 2 minutes time to post all your queries. I have covered everything in detail. So fine, guys, this is all what about standard costing. Again, very important chapter from examination point of view. You will find a question in every attempt on standard costing. So try to solve the question using the concepts. Again, in the yesterday's session, Jay sir, Sen Gupta sir mentioned that focus on the concepts rather than memorizing the formula, be it any chapter. So herein also this funda or theory applies to standard costing also. So focus on the concepts rather than memorizing the formula. Initially, you'll find it a bit difficult to apply the concepts, but trust me, once you solve 3 or 4 questions in writing, trust me, you'll find this chapter very interesting and very easy. So try to solve first of all the questions of study material specifically. Start with illustration, then practical problems. Thereafter, variety of questions are there in past practice manual. So you can just go to institute website. You will find, you just write down past practice manual IPCC. Download the practice manual and try to solve the questions of practice manual. The questions are very good and bit on the trickier side. But yes, if you are thorough with the concepts, you will be able to solve the questions on practice manual. Apart from this, once you are prepared with costing, all the chapters of costing, then approach MTPs or RTPs and try to complete these RTPs or MTPs in a given frame of time. Generally, the time is 3 hours. So try to complete these RTPs or mock test papers in 3 hours period. So you'll be able to understand that where exactly you guys exist. What is the speed of solving the paper? It will give you a clear idea about what's the paper examination pressure, how the examiner do ask the question. So it will help you to prepare for your exams also. So once you are thorough with costing, then start with mock test papers. You'll be able to understand that where exactly you stand. So that is the key. Again, I have mentioned in all my sessions, try to solve the questions in writing. There is no alternate of hard work. So try to solve as many as possible questions in writing. Trust me, if you will write what you will write, you will remember, and you will be better with the concepts. And again, speed also matters a lot. So anyways, guys, thank you so much for your time and patience and for participation in the session. Still, if you have any doubts or queries, you can just simply write a mail, cma dash enter @ICAI.in, addressing my name. I'll be attending all your queries. I'll be addressing all your queries. Don't worry, guys. I'm there till the last date of your exams. So don't worry. Wish you good luck for your exams. See you. I think my next session is on marginal costing. I think it is on 1st December. So don't worry, guys. I'm there. I'll be available on 1st December to discuss the concepts of marginal costing. In the meanwhile, I suggest you guys to complete all the chapters. I think 7-8 days are more than sufficient, since these are the revisionary classes. And those who are going for Gen attempt, try to finish up the syllabus. In the meantime, I think you have 10 more days. In 10 days, you can easily finish the costing syllabus. If you dedicate 6 to 7 hours to costing also, you'll be able to finish off. And make sure you guys, those who are watching over YouTube, also try to join it via Zoom. And whatever the queries you have, you can speak to me. Again, marginal costing is a very important chapter from examination point of view, just like standard costing. So make sure you guys are prepared for marginal costing and come with all your doubts and queries of marginal costing in the coming session. Till then, take care of yourself. God bless you. See you. Thank you so much.
Thank you so much, sir.
Yeah. Admin sir.